Now I'm going to tell you why we are not supply and demand, and you can put the middle finger up to everybody that tries to say that's what it is, because today you're going to find out with the science behind why it's not. Zones. We don't deal with zones, and you want to screenshot that. Okay, so we've seen it go down into the lower half of this SIBI, which is a fair value gap that has a down close. It knocked out anyone that went short, traded down once more to the consequent encroachment, a mohawk, which is just coloring outside the lines, and trading up into that end all new day opening gap. And this is again Friday's new day opening gap. Right here, the liquidity is this. That's your buy side. Right there. And then up here is mid gap, or consequent encroachment of the opening range gap. And that's all that we need to worry about at this moment for you, Caleb. Okay, so we have a small little gap in here. Notice it's over here. It's the same thing, just going lower. So we have a fair value gap there, and we have a fair value gap right there. This, to me, isolates all this price action. So I view this as a balanced price range. I would prefer it not to see that fill in. It doesn't mean if it goes down and fills it and touches this candlestick's high or the small little volume bounce that has to be included. Like if you're drawing this fair value gap here, you can't just use the wick like that. It's not valid. That's not valid. You want to use the volume imbalance that's part of and inside of. What am I doing here? Okay, yeah. That's incorrect. This that's valid because you're taking in consideration that the difference between the two bodies that they are not touching. So you have to have all the way down to the previous candle or number one candle in this case, which is the opposite of this. Okay, so we want to see it trade above the end dog, come back down. It can use the top or the midpoint of that, spring from that up into the minor buy side, maybe hopefully accelerate and reach into that mid gap. And we still got about 7 minutes or so to see if we can hit that mid gap, because again, 70% of the time, it's not 100%, 70% of the time, mid gap gets hit within the first 30 minutes. So back to this discussion here for fair value gaps. We're not supply and demand. We don't trade in zones. So since number 3 candle, that is your entry candle. Number 2 candle is your framing of the fair value gap. What's the part that's the area where price should come back and revisit it? It's the candle that has no previous candles low touching the next candle after